2011 to 2015 and had an interaction with a lot of heads of businesses in your group. And that before we could fully recover from the pandemic. No wonder we have earned accolades from multilateral agencies, with the IMF chief terming India's strong economic performance as a bright spot across the globe and observing that India alone is expected to contribute over 15% to the global economic growth this year. The World Bank has similarly commented that the Indian economy continues to show a strong resilience to external shocks and projected admirable growth at 6.3% in the current fiscal, featuring India like an oasis. Yet, some leading global journals and some of the globally reputed economists of Indian origin have been quite critical of our economic policies and handling of the economy during the recent crisis. Some went on to the extent of referring the RBI as ravaged Bank of India. Sir, I would request you to share your views on countering such motivated narrative against India. Sir, on the global macroeconomic front, policymakers and central bankers are struggling with the trichotomy challenges of economic slowdown, high inflation, and rising interest rates, along with the demographic and rising unemployment issues. Some of these issues are more serious in our neighboring countries, actually. In addition to these complexities, there is the worsening of geopolitical relationships, particularly amongst major economies. The war in Europe seems to be prevailing purposelessly, yet endlessly. There is a distinct slowdown in demand in global markets, negatively impacting our exports in several sectors, apart from disturbing supply chains. In this context, I would request Dr. Ranade to enlighten us on how the Indian economy is poised to meet such challenges and to what extent the macroeconomic indices of fiscal deficit and current account deficit may be affected as a result. Sir, how far do you agree with Mr. Kumar Mangalam Birla's notion of India in midst of a capex mahotsav? Will it get impacted with these kind of challenges that we are facing in the near term? Another noteworthy issue is the gradual reversal of what we knew as globalization to what now can be called deglobalization. Inward-looking, selective, or exclusionary trade policies are becoming an order of the day, therefore adversely impacting global value chains and supply chains. Sir, I would request you to share your thoughts on the plausibility of India's G20 presidency in addressing the impacts that would arise from such protectionist policies. Sir, the interest rates have been rising steadily. Despite the recent pause, RBI has hinted that the challenge of taming inflation is still not behind us. This has already increased cost of capital for businesses substantially, a problem which can worsen further. Sir, kindly share your thoughts on the incidence of rising interest rates in taming inflation and its probable impact on the financial markets in the short to medium term. The Indian rupee has been falling with respect to the US dollar for quite some time now. To address the devaluation of the domestic currency, RBI has encouraged more external trade in INR by offering the rupee Vostro account facility in 18 countries. Going forward, this list may get longer. In fact, our chamber had a business delegation earlier in March to Bangladesh, where we advocated this with the Bangladesh Bank, our RBI's counterpart. And the deputy governor in charge over there was extremely positive, inclined towards actually starting this with India, and would be doing an active follow-up with our policymakers and with RBI. Going forward, this list may get longer. I would request Dr. Ranade to share his views on India's falling currency and the implications that would have our external sector and industry. Sir, in the context of inflation, you voiced your opinion on a recent study shared by the former Deputy Governor of RBI, Dr. Viral Acharya, who argued that the concentration of market power with 5 largest private business groups in India is contributing to persistently high core inflation. So for the benefit of our members, would request you to share your thoughts with the members on this finding. What are your thoughts? Before concluding, I would request you to kindly share a message for Bharat Chamber of Commerce on its future course of action with respect to involving policymakers in designing effective economic policies for catering to the needs of the trade and industry, both large and small. We have a good concentration of MSME players as well. I would also like request you to spare a few words for your guidance to businesses, entrepreneurs, and investors in financial markets amidst these economic challenges that we are facing right now. With these words, I conclude my observations and request Dr. Ajit Ranade to commence his address. Thank you, friends.
Thank you very much, and namaskar to all of you. With your permission, can we start with a shloka? It is a well-known shloka, and please help me in case I stumble. So it goes like this: Om Sahana Vavatu Sahana Bhunaktu Sah Viryam Karvavahe Tejasvina Vaditamastu Ma Vidvishavahe. It means common be our endeavors, common be our understanding. This is in the context of a study and discussion that we are going to do. So common be our endeavors, common be our understanding, common be our search or desire for knowledge. May there be no dvesh between us. There can be disagreement, but let us not become disagreeable. We have the freedom to dissent, debate, disagree, but we do all of it in the spirit of a common endeavor. So I thought I should begin with that shloka. Thank you. So Mr. Naresh Pachisia, Senior Vice President, Bharat Chamber of Commerce, Mr. Rajkumar Agarwal, Vice President, Mr. Santosh Rungta, former President, Mr. Keka Sharma, Secretary General, and special mention to Mr. Khetan, who is not here, and all members, distinguished and respected members and friends and colleagues. Good afternoon to you, and a very special thanks to all of you for inviting me to share some thoughts with this esteemed chamber members. This has been coming for some time, and Mr. Khetan, who's been a very friendly and insistent person, he has been we have been trying to negotiate a date, and I'm glad I'm able to come to Calcutta. As Mr. Naresh Pachisia said, for the last 1 year, my career has changed a little bit. There's a new innings that I've started. I've taken charge as Vice Chancellor of institute called Gokhale Institute of Politics and Economics. It is a deemed university, which is 93 years old, and it is named after Gopal Krishna Gokhale. As you may know, he is considered to be the guru of Mahatma Gandhi and also the guru of Muhammad Ali Jinnah. And Jinnah famously said that I would be like to remembered as the Muslim Gokhale. So he was a staunch constitutionalist. He was, of course, a leader and president of the Congress party at an earlier stage. He was a member of the Provincial Council and then later a member of the Imperial Council, where he succeeded Dadabhai Nauroji. And he used to be one of the first rebuttals when the budget was presented in the parliament in London. And he used to staunchly defend India's interest and criticize the colonial policies of exploitation. So in his name, the institute is in Pune. It is mainly focused on postgraduate studies in economics and allied disciplines, including finance and sociology and political science and demography, statistics, and so on. So we have about 120 PhD students. We have 700 master's students in various disciplines, including agriculture, health economics, demography, financial economics. And we have recently also started an undergraduate program. I just mention it because it is, while it is probably the only university in India focused exclusively on economics and allied disciplines, but we are happy to report that we get a lot of people from this part of the country. Some of your toppers choose to come to Gokhale Institute over the years. As I said, it's almost 100 years old. So I have this opportunity to head this institution, and I've been doing that for the last 1 year. Before that, of course, I had a fairly long innings with the Aditya Birla Group, and thank you very much for your kind words. Mr. Patricia, by the way, is a man of a thorough homework, so I feel a little intimidated speaking, because he has obviously kept track of my various writings. Have had the privilege and freedom to be writing occasionally in the business press on various issues, namely mostly dealing with economic policy, but also sometimes about social policy. So he has given me a fair bit of ground to cover, which I will try to do. But I will request all of you, because this is such a wonderful setting for me, that this is a chamber which is 123 years old. It's really a great feeling to be in a chamber with such a long history, that I don't want to miss this opportunity to have an interaction with you. So I sincerely request that we devote a substantial amount of time for an interaction. So what I was going to suggest, I told Mr. Patricia that maybe I'll speak for the first perhaps 30-40 minutes. But more importantly, I look forward to an interaction and maybe a Q&A session and a discussion with all of you, which I would greatly value. So just to begin with, since the title of our session was Global Economic Headwinds and its Implications for the Indian Economy, I want you to go back at least maybe 5-6 years. If you look at the past 6-7 years, actually, starting with demonetization in November 2016, followed by the rollout of a historic reform called the Goods and Services Tax, GST, followed by the collapse or implosion of the ILFS, non-bank finance, you can call it a conglomerate. Then followed by the unexpected, what should I say, the completely unexpected but global phenomenon called a tiny something which we cannot even see, a virus. And then, of course, followed by the war in Ukraine. So you can see over a period of 6 years, each of these events, I mean, I'm not even counting some of the smaller events and these are majorly disruptive events. And surely that does cause an impact on the economic growth, economic outlook, consumer confidence, more importantly, investor confidence. Investors look for, usually this I was going to discuss a little later, but maybe this is the right time to mention it, that investors typically look for stability, predictability, continuity. They don't like, I mean, you and I, all of us have been in the investment planning and investment scenarios. We don't like sudden disruptions and all the time. But perhaps we are in an age of heightened uncertainty. I've not even mentioned larger phenomena like climate change, which is changing weather patterns and which is changing cropping patterns, or rather cropping cycles, and also now the latest disruption being ChatGPT and artificial intelligence. So we are in an age where from various quarters we are subject to being faced with uncertain and often disruptive developments. So if you look at the global challenges of global economic headwinds in that context, I also need to now go back even further, say 15 years, not just 7 years, 15 years, 2008 September, more precisely 15 September 2008. I think it was a Sunday. Now, just 3-4 days before that date, who's who, in terms of rating agencies or experts, even capital market experts, had said that this is a AAA rock solid gold standard bank. This bank was called Lehman Bank, and it had a heritage of perhaps 250 years of being a very respected and solid bank. And just like that, it went completely kaput. It just collapsed. Um, that was an incident of such unprecedented magnitude that people said that the financial crash that ensued after that, they called it once in a century. You know, it's that kind of impact. In fact, we call it now the global financial crisis. What happened in 2008. Of course, people in India and other parts of Asia, we don't like to think of it as global financial crisis because it didn't emanate in this part of the world. It was contributed by factors which were peculiarly in North America or Europe. So it is better to call it the transatlantic financial crisis. But the fact is, of course, it had global dimensions and global repercussions. So I take you back to 2018. I mean, 2008, because what happened in reaction to that was that the Secretary of Treasury, whom we would call the finance minister in the US, remember this was September 2008. By November, they already had the presidential elections and the electing of an unexpected, first time in America's history, a black person was elected as president. That happened in the first week of November, just maybe 6 weeks after the Lehman crash. And yet the outgoing, or what is called the lame duck President Bush and his team, that is his Secretary of Treasury, they convened. So Secretary of Treasury in that fateful September day convened the emergency meeting of their legislature or parliament, which is called Congress and Senate, upper house, lower house and upper house. And they were able to pass an emergency program relief of $700 billion, which is a very big amount even by American standards. That was called TARP, Troubled Asset Rescue Package Program, TARP. And then, of course, subsequently, the monetary policy also responded by drastically cutting interest rates. Since Mr. Patricia mentioned the phenomenon of rising interest rates, which has come after almost 12 years after that incident, 12, 13 years. So I must mention, we should go back to that starting point. So what happened is that not only was there a huge fiscal package called the TARP, and very, very unusual and unprecedented, because America government, which believes in free market capitalism, actually rescued companies like GM, General Motors, an automotive company. It is as if government of India is bailing out not just say Yes Bank, but bailing out, let's say, Tata Motors or Bajaj Auto. So even in India, that would be unthinkable. So anyway, that happened. They bought shares in England. In the UK, they rescued a bank called, I think, RBS, Royal Bank of Scotland. So very unusual things were happening around that time. I mean, it's not that distant history. I'm not recounting something from 50 years ago. This is just 15 years ago. The reason I need to mention that is because that has had a long shadow. So essentially, this low interest rates or nearly zero interest rates regime lasted all the way, I would say, for a long time. And people got, I don't know if you remember, they gave it some fancy names. If you keep reducing interest rates down, what happens? You come to zero. At least so far, economic theory and textbooks have not figured out what it means to go below zero. So interest rates have a lower bound, which is zero. Now, uske niche kya karenge? What do you do? Then you call there's a fancy name for it called quantitative easing, QE. So what they started doing is the monetary authorities, that is the central banks, started buying, not just reducing interest rates, but started buying bonds, not government bonds, but also corporate bonds. So this is the quantitative easing. So you're trying to, Namaskar. We are trying to. Oh, thank you. Well, so as I was saying that I need to go back to this 2008 because this is what we were used to for a very long time. Very low interest rates, ample liquidity, very easy credit. And this was true not just in North America, it was true in Europe, it was true in European Central Bank, it was true UK, it was true in Japan. And what did that mean? It meant that, in simple English, it means printing money, expanding money supply, keeping interest rates low. So much so that when you expand money supply, what happens is the balance sheet of the central bank. In the case of India, it is Reserve Bank of India. In the case of America, it would be the Federal Reserve Bank. The balance sheet starts expanding because the notes that are printed, the money that is circulated is liability on their books, and assets are, of course. So the liability, the balance sheet of the central banks increased by 400%. I'm talking about from 2008 all the way up to 2008. So throughout the presidency of Obama, and then after that, President Trump. And I think this expansion. So I'm giving you this global background because we need to understand the global backdrop before we come to COVID and Ukraine. This expansion of money supply was also in parallel, had a parallel development of steady increase in the stock market. So in fact, if you had invested in the US stock market around 2008-9, you would have got the best return in the world in dollar terms over the next almost 10 years. So we had, and then job expansion for almost 120 months, perhaps, jobs were expanding. So every they have this weekly jobs report and a monthly jobs report, continuous expansion of the economy. Economy was expanding, but the funny thing is that money supply expanded by 400%, but GDP went up by only 40% or maybe 50%. Because for America, 4% per year is fantastic growth because the base is very large. So if the economy grows by 4% for 10 years in a row, that's 40%. So GDP, which is the sum total of economic activity in goods and services, that expanded by 40-50%, but your money supply is up by 400%. Now, even a fifth standard student will know what happens. What do you think happens in such an economy? If money supply has grown by 400% and GDP has grown only by 40-50%, what happens? Exactly. We should have seen inflation, but there was no trace of inflation anywhere. People had to go and look under a rock or look into a corner. Where is inflation? There was no inflation. In fact, the Federal Reserve Bank of America was trying to fight disinflation. They were trying to pursue policies, even more QE, even more money supply increases, because वो 2% के नीचे चले गए, 1.5%. They wanted to increase inflation. So what is the answer to this mystery? I'm just giving us a simple economics understanding. The answer to this mystery is that all that money supply was going into the asset markets. So stock markets were doing handsomely well, and housing markets, especially. If you look at New York, if you look at London, if you look at Austin, Texas, if you look at San Francisco, you look at Sydney. In Sydney, 95 to 98% of the people live in houses that they cannot afford to buy themselves. Unprecedented for Australia. There are now 100,000 or 200,000 homeless people. Australia is normally a very prosperous and they don't have these kind of problems. So the inflation that you did not see, you did not see increase in inflation for commodities or food items, for petrol, diesel. You saw that in asset inflation, which was basically the market. To some extent in commodities, in the sense of those commodities which were traded on the London, the London Metal Exchange, LME, and bullion, to some extent also bullion, I think. But that's the mystery. I mean, that's the answer, that all this 10 years of prosperity, because Mr. Obama, when he came in, the situation was very bad. We had just come out of Lehman crash, and it happened in September. He took oath on January 20th, 2009. But under his presidency, of course, there was economic expansion, job expansion, GDP expansion, and stock market, of course, did very well. Then you come to Mr. Trump. Now, of course, the fact is that even though the economy was growing at 3-4%, it was not, we were not seeing a substantial increase in investment. So that's where I'll come, that investors. So if you need sustainable and strong growth, you need to at some point start investing in infrastructure and solid investments. So they say that the job expansion was going on, but the jobs were of lower quality. So you still had a job, you still had a talent crunch when it comes to higher end jobs. You had, of course, a degree of automation. You know, even in India, there is, as you know, there is danger that 60-70% of the jobs may be lost due to automation. When you go from internal combustion engine car to electric vehicle, you go from a car which has some 4,000 parts to a car which has not even 400 or 300 parts. So all the auto ancillaries, the MSMEs who serve the auto industry are suddenly, what do they do? So this is something we need to be aware of. So some of that also is probably going on in America. That so the job expansion was going on, but these were all lower end, for $15 per hour kind of jobs, which are not high end jobs. So somewhere sooner or later there was a reckoning, and I think therefore the rise of Trump is basically because he exploited the fact that the blue collar people, workers, the people who were not either in the asset markets, Wall Street, or the housing markets, housing asset owners, they were feeling left out. And then, of course, you must have read the great book by Thomas Piketty, which came out in 2013, which talked about increasing inequality. So that became a big issue. And that's how Mr. Trump was able to exploit that. A large part of America was feeling left out. You know, on one hand, you keep hearing about rising stock market, you hear about these new billionaires, you hear about housing prices, but mere zindagi mein wo mujhe dikhai nahi de raha. Why am I struggling? So some of that he was able to tap into. Of course, it was a very close race, as you know. In fact, the New York Times, I think, reported that Mrs. Clinton had won. So they wrongly reported that, but so it was a close race. Same thing happened. This happened in November 2016. But in that year, in June 2016, another unexpected outcome happened, which was Brexit. There was no way in London, people would not, it was unthinkable that England will choose to leave the European Union after 53 years. Imagine you're part of the European Union for more than 50 years, and suddenly you decide to leave. The UK decide. Same thing, it's a similar phenomenon, the Trump phenomenon, that people outside London, so Greater London area, you can think of it as the Wall Street or the New York equivalent, but people who are in hinterland, they were feeling left out of this phenomenon because the loose monetary policy was going into asset markets and not real investments and the job creation of higher quality. So I want you to just take note of this development backdrop before we come to COVID and Ukraine. And this explains some of the geopolitical, mainly political developments of things like outcomes like Brexit and election of Trump in America, which were considered to be unexpected and quite, shocking for some people. So that sooner or later had to find its way to real inflation. That you can't roll back. It's not like money expansion was being done. When in 2013 May, I think the Federal Reserve Chairman, Mr. Bernanke, he first used the word taper. Aapne suna hai word TAPER? Taper tantrum. So actually in America, in Indian lingo, ye pata bhi nahi tha logon ko, but suddenly it became a big word, taper tantrum. What he meant is, taper ka matlab hai to narrow. So he was saying that the from 2008 to 2013, only 5 years then, we have been expanding money supply at a rate of $85 to $90 billion of fresh printing every month. $80-90 billion of dollar printing every month. So he hinted that it is time to now go from $80 billion to perhaps less, 70 billion or 60 billion, which is still expanding at a rate of 60 billion or 50 billion, but at a tapered rate. The moment he mentioned taper, the stock markets and the bond markets reacted so violently that 5 currencies, five economies were called the fragile 5: Indonesia, India, Turkey, I think Brazil, and one more, I think. So it was a violent reaction because that just showed how much jittery the asset markets have become. You're pouring all this money, and the money is just driving up the stock markets. The moment this taper word was mentioned, there was a big sell-off. And hastily they had to then say, no, we are not tapering. Avi time, we'll wait for some more time. So from those days, I think, and of course, then India had its own election. So, that story, I believe, personally, I feel that there was macroeconomic instability because of this taper tantrum, and because India's own fiscal deficit was not comfortable at all. Because what we did in 2008-9 was we just expanded our deficit. And our economy, if you remember, in 2009 and 10, we actually recorded 9 or 10% GDP growth. So we should have quickly used that opportunity to reduce our fiscal expansion. But Mr. Pranab Mukherjee was the finance minister, and he was determined to continue with this fiscal stance. And therefore, I think that partly contributed to India's fiscal situation becoming a bit precarious. And on top of it was this currency instability caused by the comments of the Federal Reserve Chairman. And then that caused the exchange rate to come down. And then we also had the fact that the NPAs started showing up because Mr. Raghuram Rajan became the governor. And he started insisting you have to do what is called AQR, asset quality review of banks. See, banks knew that at some point these infrastructure loans, unprecedentedly during 2006-7, banks were asked to fund infrastructure, which is not their job. When you build infrastructure, which is long gestation projects, banks can give loans for 2-year, 3-year, 5-year term loans. They can give loans to industry, they can give to real estate, but asking them to fund 25-year projects, it's fundamentally a mismatch. But they were asked to do that, and at one point their asset book was 15% loans given to infrastructure, and that started showing the strain. So all these things happened together at that time, and then of course we had all those scams and so on. So we had a big regime change in 2014. First time after 30 years we had a majority in parliament and so on. That history we know. So then so this is the backdrop. Then you now understand the one thing that I need to mention here is that when Trump became president, he picked up the gauntlet. Or in Hindi mein bolenge, unhone panga liya. He decided कि मैं China के साथ पंगा लेने वाला हूँ. Because it's not about trade. It's not about trade in goods and services. The real panga was about the fact that the US, I think, has started becoming concerned that the Chinese, by distorting trade practices or using sort of unfair or unethical trade practices, especially on intellectual property rights, they had now taken a lead in areas like artificial intelligence and electric vehicles and those kind of technologies. But the semiconductor technology is still largely with America. So this is the new tech Cold War. I call it the tech Cold War. If you go to China, you will not see you will not see a trace of Google or YouTube or Facebook or Twitter. Nothing. Not now, for the last 20 years. So it is almost as if the world is divided into two spheres, tech spheres. You're either in the American sphere or in the Sinosphere or China sphere. And there is no intersection. And therefore that, to my mind, what Mr. Trump started doing sometime in 2018, I think, or 17, where unilaterally he increased the import tariffs on steel coming from China, on aluminum coming from China, on various other goods. And there was a tit for tat. When Mr. Patricia in his opening remarks said that deglobalization, I would not call it outright deglobalization, but actually it was a retreat. America started becoming protectionist, and the protectionism was basically targeted at China. And it's an interesting tidbit that in, I think, 2017 or maybe it was 18, when the WEF, the World Economic Forum, met at Davos, which is the high-profile meeting in January, Mr. Xi Jinping was a special invitee. And he made a famous speech that China stands for free trade and we are against America's protectionism. Now, this is the kind of speech you could have expected exactly ulta, 10 years ago. You could have expected that America would say कि China ka protectionism nikalo. US is the flag bearer of free markets and globalization. But how times have changed that Mr. Xi Jinping was making this speech in 2018. And then, so that has continued, even though now the Trump presidency has gone to Mr. Biden, but that has continued. The harsh and the hard, uncompromising stance with respect to China, Americans are continuing that. There is continuity in that policy. and there is still this standoff. So then you come to this COVID and Ukraine. So then during COVID, of course, we had a complete shutdown of a large part of the economy. So therefore, when demand collapses, or rather it's not demand collapsing, it's actually supply just stops. When your factories are shut, obviously GDP is going to just go down. So that's what we saw. But the potential demand did not go. And I don't want to go into a detailed analysis of what happened to the economy during COVID, but as you know, the services sector, the sectors which were able to do work from home remotely, or digital economy, all those things, the healthcare economy, all those got a big boost. And by and large, they were able to at least provide some impetus to the economy. So of course, India's GDP went down by 5. First time in 42 years. The amazing thing is that India is one of the very few large economies in the world, which from 1980 onwards, 1979 was the last time when we actually had a negative number. For 42 years or 41 years, we never had one negative number. We, of course, grew. Sometimes we grew by 8 or 9%. Sometimes we grew only by 3%. But it was always a positive number. But because of COVID, that year the number was -5 or -7, something. We are back to positive territory. So in COVID, we saw oil prices going down to negative numbers. Again, this is all supply. Basically, the story of COVID in terms of economy is the story of supply disruption. Everything shut down, ships not moving, factories shut down, things like that. Agriculture, by the way, continued. The remote services continued. So, but we were able to come out of that quickly, and so also the world. That is quite the remarkable thing about the modern world, that leading experts, including again New York Times, they were saying that to synthesize a vaccine will take at least 5 to 10 years. And the world did it in 2 years, less than 2 years. This just shows the incredible power when science collaborates internationally. When there's collaboration, with gene sequencing, the Chinese also were sharing. The Chinese were also actively collaborating in the gene synthesis, the DNA sequencing, and making this vaccine. So then we had Ukraine. And now, I don't know whether we have time to discuss the geopolitics of Ukraine, but basically, suppose you have, let's say China starts building some missile. If you remember in 1962, the Soviets sent some missiles to Cuba. You almost had the Third World War based on that action, but quietly it was diffused. It took the president-to-president interaction, but it was diffused. So something like that is happening, that NATO was not supposed to expand. After the Second World War, there was this NATO form. In fact, they dismantled, what is it called? COFEPOSA and those Warsaw Pact countries. Once the Soviet Union was dismantled in 1989, 1990, all those other formations of countries were more or less dismantled. But the implicit agreement was that NATO will not expand. And there will be a buffer zone running through all these countries. But now NATO has not only expanded, but it's aiming to go up to 27 members. And that started in 2008, again 2008. When 3 new members were admitted. Now even Turkey wants to be part of NATO. And then 2014, that's when then Soviets, the Russians said they annexed Crimea. Crimea is a part of, it's like, China taking Arunachal or something. So they took Crimea because it's largely Russian speaking. Still, they did not, still the world community ignored the NATO's harsh and expansionist stance. So I think there was kind of an inevitability to what happened in 2022. On February 24, 2022, now almost 15 months ago, the Soviet tanks came in. Sorry, I keep saying Soviet, basically the Russian tanks. But the provocation began in 2008, if not earlier, actually 98. And even the very sort of renowned geopolitical experts like Mr. Kissinger and Mr. Mearsheimer, they have been saying that we are deliberately provoking. This is deliberate provocation. But now it has gone to such an extent that both parties will not stand back. And the Russians will not stand back, and the Americans will not stand back. And as somebody said, kind of how in a slightly lighter vein, the Americans will fight till the last Ukrainian. So all the arms and this thing are supplied, but the Ukrainians are dying. And it's possible that China will, and the only one country which is emerging stronger because of this conflict is China, because they are waiting at the sidelines. And I won't be surprised if by next year, Mr. Xi Jinping will be declared as the peacemaker. He will make a deal which the Russians will agree, and a peace. But so many lives would have been lost, and God knows what else. Now that has affected the global economy in a bad way. That has affected that inflation has spotted up finally. Remember what happened? So I wanted to tell the story of since 2008, because actually the money supply is out there. Sooner or later, it's going to manifest itself in inflation. That's what happened. So there is now very high inflation. America is experiencing 8% inflation, which for them is unprecedented. They're not familiar with this kind of inflation, and it doesn't seem to be going away. And because of that, the Federal Reserve Bank has no choice but to keep increasing interest rates. For the last 12 months, it went from 0% to 5%. And therefore, a bank like Silicon Valley Bank, which was rated as a top 20, by Forbes magazine, top 20 banks of America, it just folded up overnight, because some $200 billion of their deposits were invested in bonds. And when you know that when interest rates go up, bond values go down. So the value of their investment just went down by 50%, which was less than what their depositors had. So there was panic, so they had to shut it down. Then they shut down Signature Bank. Now they've shut down the biggest bank in Switzerland. So this is the impact of this kind of monetary policy. But of course, there are other reasons. In the case of Credit Suisse in Switzerland, there are some shady practices also. And now, again, same thing, this free market economy, they believe that we should work by market rules. So the Federal Deposit Insurance Corporation says your deposit in the bank will be protected up to $2.5 lakh, not beyond that. And 93% of the deposits in Silicon Valley Bank were above $2.5 lakh. But the president of United States, not the Federal Reserve Chairman, not the FDIC chairman, he made a statement that we are going to give everybody's money back. All depositors will get their money back. Politics, no longer just market practices. Same thing with Signature Bank. So therefore, it's clear that these are not happenings which are obviously, these are not extremely optimistic developments. So the world has to contend with a slowdown. We have heard of the layoffs in the tech sector, Google and Microsoft and all these companies. And we are hearing of how H-1B workers, Indians, some, 50, 60,000 of them, because nowadays you have to find a new job in 60 days, otherwise you have to come back. Even in India, we are hearing about tech sector layoffs. So thankfully, in India's case, our domestic economy is our savior. Because I would say the biggest factor is our demography. We have our median age of India is less than 27 years old. Our workforce is expanding faster than the rate of population, which means in the range of people in the age group of 18 to 60, the population is increasing at around 1 or 1.1%. But this workforce is expanding at 2% or maybe 2.2. So these are the people who hopefully are going to get a job. They're going to get an income. They're going to save. They're going to invest. They're going to pay taxes. They're going to consume. So this is the demographic phenomenon, and which will be there with us for the next 20, 30 years. Of course, we should not take it for granted. And on top of it, demography, we also are seeing impact of I would say, urbanization. India's GDP grows faster in urban areas than rural areas. So if the pace of urbanization is faster, you obviously see GDP growth faster. And India's urbanization rate today is only 33%. The world average is 50%. Developed countries are at 90%. China is at 65%. We are at 33%. So even if we grow from 33 to 36, that's a 10% jump for us. So imagine the kind of impact it has on GDP. Of course, we have to worry about things like how to do it in a more environmentally friendly way. because now we know that the sort of consequences of unchecked, unplanned, thoughtless urbanization means you will have waterlogging, you'll have traffic jams, you have water shortage, you have air quality issues. I'm very happy that on the way back, on the way to your office here, I saw big billboard saying AQI 115 and so on. So it's very nice to see that people are now paying attention to things like that. So I think, but those are the drivers. So for India, the demography, the pace of urbanization, and on top of it, the whole infrastructure pipeline, whether it is in the form of Gati Shakti or before that, and the digital economy slash green economy. So these drivers are something that we can count upon, and I think that will hopefully keep the pace at 5 to 6% for the next few years. Will India be immune from what's going on in the world? Of course not. We cannot be immune because we, in spite of globalization having taken a slight setback, we are still a highly globalized economy. So what happens in the rest of the world affects us. Our exports are going to be affected because our export, if the global economy experiences a recession, our exports are affected. Our exchange rate will be under pressure. That's why the Reserve Bank of India, by the way, has not only Bangladesh, we have signed a treaty with 18 countries, 6 of them from Africa, then UAE. So all these countries are very happy to negotiate rupee trade with us, meaning we will pay for our imports in our currency, and the respective central banks will keep a swap account with each other. And even invoicing can be done in local currencies. The Indo-Russian trade is happening in rupee ruble trade. Indo-Iran is happening. Of course, our problem is that we import much more than we export. तो वो लोग बोलते हैं कि Russia बोलेंगे you're importing $12 billion from us and you're only exporting $2 billion to us. So you pay us $12 billion worth of rupees. हम लोग क्या करेंगे? We can only buy rupees from you. Now we can tell them, you know what, you can go and buy some clothes from Bangladesh with our rupees. You can buy it from the other 18 countries. So I think we are going to see progressively some degree of...
Bangladesh has this reverse thing, They export to India only $2 billion worth.
And we export much more.
From India about 16 billion.
So they can use our rupees, actually. That's right. So wherever we have an export surplus, one country with whom we have a tremendous, very big export surplus is America, $32 billion. With China, we have a $50 billion negative trade deficit, but with America, we have 32 billion surplus. So India is in a pivot position. We are good friends of Russia, but we are good friends of America also. And we want to be reasonably, not friendly, but on talking terms with China. So potentially it can be a great power state if we really, if the economy does well, then we are in a pivot position where we can, our relations with America, China, and Russia are better than the relations that they have with each other. Of course, Russia and China are close, but our relation with America and our relation with China are better than their own relations with each other. So that's a pivot position. So you can play a important geopolitical role. So I would say for the next few years, this is what I think. But very quickly, I'd like to comment on 2 or 3 things which you asked me to say. That I mentioned already the foreign exchange impact. I think since we're doing this currency agreements with 18 countries, to some extent we'll be able to cushion, but the dollar is getting stronger and stronger. So you expect the rupee to go to 82, 83, I think. That will happen. On the interest rate impact, I told you about Silicon Valley Bank. So we have to live with higher interest rates. Incidentally, the home loans are increasing, but the EMI is not changing. So the home loan rate is increasing, but your EMI is not increasing. So the EMI is same. The equated monthly payment installment that you pay is the same, but your interest rate is higher. Uska matlab kya hua? Lamba. So number of EMIs has extended. So if what was a 10 or 15-year loan, I am told has become a 42-year loan. Now, the guy is not going to be around for 42. So his children will have to take the debt. So that is a big concern in the banking industry. New set of NPAs there we have to worry about. And then you mentioned about contribution of these big 5 conglomerates to inflation. So I don't know if there's time, maybe we can look at it later, because the fact is that the concentration ratios in India have been increasing quite a bit for the last 10 years. The top 20 firms, now top 2 dozen, I think, 12 or 15 firms, they account for 80, the top 20 profit generate account for 80% of all profits of corporate India. Then in terms of market share and profit share, also the top 5 have gone up, doubled in the last 10 years. The fact that after demonetization, there's much more formalization of the economy, and then GST, that has really hurt the SME sector. I can talk separately about SMEs because that's one of my favorite topics. But people who have gained are the larger firms. So the pricing power has increased. In the financial analysts like to use this word pricing power. So larger corporates have bigger pricing power. And we have to think about what is the impact on inflation. Now, of course, a company like Birla Group, since I was with them for a long time, I must mention, if you are selling aluminum is determined by London Metal Exchange. So they can say that we are not charging higher, but aluminum prices have really gone up. But say somebody who's producing steel, they're getting protection because now you have import duties on Chinese steel. So you have anti-dumping duties, you have import duty protection, and then you are increasing steel prices. So this is something, I actually said in that article that you may or may not agree with Mr. Viral Acharya, but the Competition Commission of India should examine this issue independently, do an independent research. See, Competition Commission of India ne Google pe tax lagaya, big penalty of some 1,000 crores or something, because they feel Google is abusing its dominance in the Android market. But 2 साल एक बड़ी टेलीकॉम कंपनी थी जो 0 प्राइस पे डेटा बेच रही थी और 0 प्राइस पे टेलीकॉम सर्विसेज दे रही थी. Then nobody used the word predatory pricing. The Competition Commission of India did not find it. There's no problem. This is very competitive. So exactly, the MSMEs are at the receiving end of all these things. MSMEs don't have pricing power. And MSMEs, by the way, to me, Dun & Bradstreet report of May 2022 says that the overall aggregate pending payments, delayed payments across 63 million, there are 63.5 million MSMEs in India. So they have done an estimate 10.7 lakh crores, almost 11 lakh crores is the pending payment. A large part of it is from government, a large part of it is from PSUs, but also from large companies. So large companies also try to squeeze their vendors. And often, the railways have 1 million vendors, but all those vendors have only one customer, which is railways. So, छोटे छोटे MSME company, they have only 1 or 2 or 3 vendors. Why should they take panga with your customer? Customer को बोलेंगे उनके पैर पड़ेंगे, please pay us, sir. So what happens is आपको मैं repeat order देता हूँ, next order में से निकाल के लीजिए. So ये 10% is always pending. You know what I mean? Okay, I'll give you a new order. उसमें ये adjust कर लो. Then there is this, they say that there is this MSME Act which says that you cannot delay payment more than 45 days. But then they play with this kacha invoice, pakka invoice. Invoice to pakka hua hi nahi. So Reserve Bank of India had recognized this problem, and in 2018 they introduced an idea called TREDS, trade in receivables. So if a small company, SME, has a receivable of say 5 lakh rupees, you can put it up on the e-platform, and then it's called bill discounting. But there have to be participants there, no? If there are no participants, because the large companies are not putting their names on this, so the government is trying to nudge that. So this is a big problem for MSMEs. I think that the receivables are mounting. Imagine if it's 11 lakh crores and if interest rates are at 10%, actually they have higher interest rates. 10% of 11 lakh crores is 1.1 lakh crores. So much money will be released. The government doesn't have to give any subsidy. No mudra loans are required. This money will directly go to MSMEs. They will get a naya chaitanya aa jayega unke pe, they'll feel so much energized. So releasing pending payments should be a very high priority. And I think as a chamber, I hope you are focused on this issue and try to put, I call it, Pune mein I'm part of the chamber there. मैं उनको बोलता हूँ मराठी में, we call it project नैतिक दबाव, ethical pressure. In this year's union budget, the finance minister, she has introduced the amendment 43B. I don't know if anybody knows here, 43B in the Income Tax Act, which says that if you have delayed payments to your vendor, then that item will be not counted towards tax deductible. It will be counted as your income. But उसमें loophole ऐसा है कि the auditor has to certify it. So you actually have till March 31. You may start, your payment is due in June, but till next March, you can pay on the last day and then it will no longer be counted. So auditor has to certify it by March 31st. And not just that, some companies may say, oh my God, this janjat, and I'm not going to buy from MSMEs. Chodo. So it may have the obverse effect. So this problem is very critical. Anyway, in conclusion, I want to say that the geopolitical environment in the world is still somewhat worrisome because of the Ukraine war and the consequence in terms of high inflation. And countries are grappling with it by increasing interest rates and tightening money supply, which has unintended or rather unintended, but other consequences like the complete collapse of banks like the Silicon Valley Bank and Credit Suisse. So we are going to see such episodes. Next 3-4 years are going to be, it won't be that easy. But India's domestic economy being strong, and we come back to this capex mode. So if interest rates are somewhat moderate, and the infrastructure needs of the country are so huge, and in different sectors the capacities have to enhance, we can possibly see an economy which is much more domestically driven. So India can continue to grow at about 5 or 6%. Even if it does that for next 10 years, it will be a good achievement. So let me stop here, and I'd like to really invite questions from and comments from you.
Thank you so much, Dr. Ranade, for your elaborate putting the context in quite details first, and then coming to the current situation and some outlook for the future. Before I put some more questions for you about the outlook, let me open up the house for questions from our members and past, present. In case you would like to open the innings, please get a mic for Mr. Rungta. Yeah.
It was, hello. It was really good hearing from you. And I see a lot of optimism in what you said. But I, for one, feel that there is not really so much hope for optimism. My thing stems from the fact that the linkage of the Indian rupee is going to play a major role in determining how the American economy is going to work. Sir, is this statement making sense, sir?
By the way, before I answer your question, when you see a glass of water, which is half full and half empty, the people ask me, so is it half full or half empty? The correct scientific answer is both. It is both half full and half empty, because that's the correct physical explanation. So it is quite consistent that if you find something, I find my comments more optimistic and you have more concerns, both can be consistent. It is not opposing each other.
No, sir, we are not trying to oppose.
We are looking at the same glass. So you're saying that will the rupee be under pressure?
Sir, what my feeling is that with 18 countries already signing an agreement, and with probably a hope of the oil getting also delinked from the dollar, maybe in the immediate future, would this lead to a pressure on the US dollar?
No, all these actions are driven by a desire to de-dollarize, to get away from dollar dependence, not only for invoicing, but also dollar clearing.
Yes, sir.
When you pay in dollars, the clearing is in New York banks, and they not only have this advantage, but they have the complete visibility. They have insider information because the clearing is happening in New York banks. So for example, if you look at India, now our number one source of crude oil has become Russia. Out of 4 or 5 million barrels per day, almost 3 million barrels are coming from Russia. And there the deal is going, it is not a dollar deal. The invoicing and the payment settlement is not dollar. These 18 countries who have signed, they will be bypassing the dollar. But that will not be enough to take the pressure away from, because you see the dollar is so dominant in the world economy. 88, according to BIS, the Bank of International Settlements, Geneva, 88% of the transactions in the world have dollar on the one side. There are two legs to a transaction. So this is from 2019 till today. The only new development is that there's a new currency called yuan, which has gone from 0 to 7%. So the fifth most traded currency in the world today is the Chinese yuan, and their share is 7%. But the biggest is American dollar, which is 88%. So it will take some time. When that 88 comes down to, let's say, 70 or 65, then what you say is true. But until then, I don't see the dollar weakening.
So, but don't you think that we are moving towards that?
We are trying to,
We
yes.
are moving towards that.
Yes,
And
yes.
I think this, whenever this happens, maybe in the next 2 years or 3 years or whatever be the time frame, but whenever this happens, there is going to be a total chaos in the way in which we look at the dollar today.
Yes.
And the
It will not happen in 2 years. I mean, it will happen. That I agree with you. We are moving in that direction, but it's not going to happen so soon. And the Americans are also aware of this. So they are now trying to do things which will hopefully prevent or delay this. They cannot stop it. Because the global GDP has already shifted to the east. Do you know that the BRICS economy, BRICS, Brazil, Russia, India, China, their GDP is now greater than G7. This happened just last year, 2 years ago. Then the bulk of the GDP, more than 50%, is now coming from Asia. So the European and North American dominance has already gone. So and the currency strength comes from GDP strength. So it's inevitable what you're saying, but it's not going to happen in 2 years. It will happen. And you see, ultimately the global currency or the currency of choice is ultimately it's all about trust and confidence. People still have confidence in the dollar because it's a stable currency. ऐसा नहीं है कि Argentino peso जैसा या Venezuelan. You hold do you know that 90% of the $100 bills they are printed, 90% of the $100 bills that are printed are circulating outside the United States.
That's right. So there is a corollary to this now, because of the fact that the interest rates in US is, if I can use the word, galloping.
High, going higher.
Is going higher. This is going to affect all the various parameters of the US economy, whether it is employment,
Yes.
which I think is, we can see and we can feel the impact of that.
It's a negative for the economy.
It's negative for the economy.
Yes.
Now, the impact of that negative economy is also going to play a dominant role in this phenomena, which I just
Yes.
mentioned.
But strangely, it is positive for the dollar. As interest rates in the US start going up, a lot of capital starts flowing uphill because they are attracted by the higher returns that you will get on US deposits. If US deposits are giving you 5% in dollar terms, it is better than earning 7% in rupee terms.
No, but at the same time, if the parity changes, if the 80 rupees becomes 70 rupees, then that part will negate this impact.
Yeah, exactly. But that is not going to happen in the next 2 years. That will take time.
So,
Yes, sir.
yes, yes.
Your understanding on the influence of the exponential development in technology on the subject today,
You mean chat GPT?
whatever,
Or
any
AI.
areas of technology.
So did you read Swaminathan Iyer's article yesterday?
I heard about it. I don't think I will.
Economic Times,
Times of India.
Times of India. Yeah.
I will do that.
Or there is an article by Noam Chomsky in the New York Times just on March 8th.
Very well.
So 2 or 3 very prominent people have written. Have you seen this 2001 Space Odyssey? One of the fantastic
Yes, of course.
1968 newspaper. The movie came out in 1968,
Yes, that is
which
correct.
is 53 years ago, 55
Okay.
years ago. And many things that are there in the movie, it has completely anticipated. Video screens, everything has come
The
true.
robotics, for instance.
And that movie ends where they have built this supercomputer,
Yes.
and it kind of obeys their command, and then 2 astronauts have to go out of the spaceship to do some repairs, And then when they are trying to come in, they say, okay, Hal, open the door. Then Hal says, no, I won't open the door because I know you are ultimately going to disconnect me and I want to live.
True, true.
So in fact, there was a Tom and Jerry cartoon on this subject, which came up 2-3 days back only in WhatsApp circulation, and it was pretty useful. But I think his question on a serious note is exactly that:
So
are these new age technologies, how they are going to affect macroeconomies and how businesses could cope up with that?
See, so one thing is sure that it is going to have a huge impact. On that, I don't have a doubt. And it is affecting almost everything you can think of. Now, how it will affect is difficult to say because I am not willing to accept that it is going to be only negative. People are concerned that, now you can get messages, you can see videos which are exactly like Obama is speaking, but it is a complete fake. So this video morphing and photo morphing and complete text. So that part is not, I mean, that will happen, but I'm not so much concerned about that. If fake news is already, we are drowning in fake news anyway. So that is not the part which we have to figure out is how are we going to be able to harness this they call LLM, right? Large language models. And the real revolution will happen when it happens in Indian languages, which is happening very soon. I mean, very soon it's going to happen. Yes. So it will definitely have a big impact on our lives. Whether it will improve productivity or it will improve, the GDP economy, that part I'm not so sure, because ultimately I believe GDP is ultimately about meeting our basic needs. Let's not forget it's roti, kapda, makan. I mean, jo bhi karo, finally it's the economic activity has to cater some of this, and that the AI is not going to give us roti, kapda, makan. At least I don't think so. So that part, the economic expansion happens at a rate which is somewhat correlated with human needs. But the impact this AI will have on automation, on education especially. Imagine in our institute we worry about students copy pasting from internet. Abhi to chodo, it will just tell ChatGPT, please write my assignment.
So Mr. Rungta, you need not be pessimistic. You are on the Makan side. Please take care of that. So yes, there is one question coming from there.
So a lot of inflation in our country is imported on account of commodities coming from and they are expensive, and the oil is one of the major source of inflation. So oil is one of the major source of inflation, and but in between there has been a stability or a coming down. So there was one comment from finance minister some time back, not in recent past, that some of the problem of high oil price, retail price, is on account of petroleum bonds issued in 2012, 13, 14. So if you can, sir, elaborate on that. Is that right, or what is the economics of that?
No, well, oil prices internationally affect us, but there is no pass through. So, for example, when Prime Minister took oath on May 26th, was it 2014? In May 2014, the price of oil internationally was something like $100 or $120. By September, just in about 3-4 months after that, the price came down to $40 and stayed like that for 2.5 years. But the excise duties did not come down at all for a long time until COVID. So the government kept on collecting high excise duties, even though prices came down from 100 to 40. And the estimated total collection by government of India on account of excise taxation or cess on petrol and diesel is something like 21 lakh crores. So I don't, so that's why we have to be very careful that we don't straight away every debate आपने सांस ली, oh ये तो कांग्रेस का सांस है या बीजेपी की सांस है. So everything doesn't have to be seen from that lens. So they are just right. The fact is that taxation on petrol and diesel has been very excessive. And that's because of our fiscal situation. There is no other source now. After GST, the state governments have lost their autonomy in tax. So the only place left to have is liquor and excise on petrol and diesel. So therefore, there's a competitive, thing between central government and state governments. So if you pay 100 and how much is it? 106 rupees a liter in Calcutta. If you just break that up into how much is tax component and how much is, cost component, you'll be shocked to know that 60% is tax. So what happened in those days, 2013 ki jo baat kar rahe hain, that oil prices had gone up, but they did not allow it pass through. So if you don't allow it pass through, somebody has to take that subsidy. So rather than taking it on their budget explicitly and transparently, they issued bonds and therefore they showed it as borrowing. But you know that every government does this and that, to hota hi rehta hai. Bhai 21 lakh crore ka hisab do humko. But they'll say ki we have expanded Swachh Bharat, we have expanded highways. So I think, this is an area which is rather tough because India does not have crude oil reserves. We only have barely 10, 20%, 80% has to be imported. I believe that if we have this combination of hydrogen and solar, because hydrogen requires a lot of electricity to produce. It's called, what is it called? Hydrolysis, no? The hydrolyzers. It requires a lot of electricity to produce hydrogen. And electricity is expensive if you have to burn coal. But if electricity can be produced using solar, then solar and hydrogen combination can work like a miracle in India. And India is a country which gets 350 days of sunshine or 300 days. So that can actually make India an energy exporter. So this is a great promise, I think. We'll have to see how it works. But until then, this is I think that we have very high taxation on oil and on petrol and diesel. That's the fact.
Good evening, Dr. Ranade. As a student of economics, it was an honor to hear you today. So just a couple of, I think you answered one of the questions about electricity already. But the other question I had was, unlike the 2008 crisis, where banking channel was non-digitized and recovery and sort of time it took was longer, what we have seen with SVB and others, the time to sort of reply to it is much shorter because of the digitized banking environment we live in. Given this change in the banking environment because of technology, what are the kind of things you think would be a little bit different from a, I would say, recessionary environment right now versus the 2008 era where the digitization of the finance was still much lesser than it is today? I hope you know that.
No, even though 2008 crisis was a very big crisis, let's not forget that in the last 25, 30 years, there have been repeated crises. In 2002 or 1, there was this peso crisis. 92 was a pound sterling crisis. Then there was the Russia, 1998 LTCM. Then don't forget 97 was the East Asian crisis. There's a currency crisis actually, the Thailand. So it's not as if an ILFS in India, which is also banking, non-bank finance. So because the fundamentally banking model works on trust. See, if all of us put our money in the bank takes our money and makes loans, and the loans take time to recover. I mean, assuming they're all good loans, they take 3-4 years to pay back and give profit. But all of us who put money in the bank, we are called demand deposits. We are called on demand. That is, we can go and withdraw. So if for some reason there is some gossip among us or some rumor or we suspect something is wrong with the bank and all of us rush to the bank, indeed the bank will collapse, even though it's a healthy bank. That's the fundamental model of banking. So you can't do anything. I mean, it has to be on a foundation of trust, that people trust that this bank is healthy and will recover. So it is nothing to do with digitization or not digitization. It is it's called fractional reserve banking. The bank has only 10% of its own equity. 90% of its assets are based on borrowed funds. That is from you and me. But the reason we all don't rush to the bank because we know कि हमारा पैसा. Otherwise, I want to go every day to the bank and locker kholo, देखो मेरा cash बताओ. We don't do that because of trust. So if you remember a few years ago, there was a rumor that ICICI Bank is going down. I don't know if in Calcutta it was there. And the Reserve Bank of India, the governor had to come at midnight, almost night, 10 o'clock here to issue a press statement saying, no, ICICI Bank is quite okay. Don't rush to the ATMs. So it's all about trust.
So second last question from Mr. Beriwal.
Yes, Mr. Ranade, you have covered de-dollarization, but what it seems that it is taking place maybe slowly because BRIC countries themselves are eager to adopt it. In August, they are taking this as an agenda. And even Saudi Arabia, Iran also want to join BRIC countries. And if they join, it will constitute 50% GDP of the world. And if they decide for some fudge currency or de-dollarization, so what will be the impact of de-dollarization on different countries and different sectors of industries and even on share market of the in India?
See, as I said, it will happen surely, but it is not going to happen overnight and definitely not in 2-3 years. It will take time. See, if somebody says that you are an exporter, you know what? I'll pay you in Saudi Riyal. Tum le lo yaar. Will you take it? Yeah, we have nothing to do with Saudi Arabia because you'll say, "Nahi, wait a minute. What? Kal kuch
They
Saudi
might
Arabia."
be working on a common currency, fudge currency on the
No, but the people have tried to work on a common currency. since
like
19
euro.
No, SDR. IMF was formed in 1944. They have a currency called SDR. Have you heard of SDR? Standard Drawing Rights. And SDR was supposed to be the common currency of the world. But it didn't succeed. So it cannot happen with fiat. This confidence, it's again the same thing, trust in banking. This confidence is a very nebulous but very precious asset. What gives confidence? That, I've seen many, I've been part, since you're part of the capital market, there are a lot of negotiations which happen, cross-border negotiations, and you sign contracts. Usme always ye rehta hai, dispute resolution clause. So the other party always prefers to have either New York, London, or Singapore. They don't say Bombay High Court will be, you've seen, those of you who are lawyers will know, because they have the confidence in कि वहाँ का जो legal system है वो resolve करेंगे and we'll get justice. So that confidence, where does it come from? Why is there more confidence in the jurisdiction of New York for dispute? In case for any contract, you need to have a dispute resolution clause. So the jurisdiction has to be defined and both parties have to agree. Nowadays, India is saying, no, kuch bhi karke Bombay High Court hi hona chahiye. So that's why dicta. The reason earlier many of these cross-border deals used to say not Bombay, it has to be either London or something, is because of confidence. See, UK is also suffering because post-Brexit, it's in a bad shape. But still, the preferred destination for arbitration and settling disputes is London. Same thing is with currency. Currency is about confidence. Confidence comes from stability of the currency. But as I said, the pound sterling was the global currency till the Second World War. So it lasted for 50 years or maybe 60, 70 years. Then the dollar took over. So dollar ka time abhi jaane wala hai. It's been 80, 90 years. But there's no candidate who will replace it. It could be Indian rupee, but it'll take time.
Thank you. Mr. Bose, last question, please.
Thank you so much for taking us to the current situation of the global economy and, of course, the Indian economy with it. So, a very small question, especially post-COVID. The world basically said no to China. Now we see that EU leaders initiated their visit to the reopen China. Maybe a little views from you, sir.
I told you that one beneficiary of the Ukraine-Russian war is actually China. Silently, the Americans are spending money, they're sending armaments they got caught in that war, and not everybody is showing solidarity with the Americans. Americans said that you should not import oil from Russia. India is not obeying that. India is happily consuming Russian oil. So half the world is not obeying America. So they are finding it difficult to have this joint statement. In fact, even in the G20 statement, they could not sign a statement just condemning the invasion. So the one big beneficiary of all this is China. And therefore, the Europeans are seeing the writing on the wall. Why even talking President Macron, right? Him going to China, the Germans, slowly they will improve relations with China. And I won't be surprised if in 1 or 2 years, the peacemaker in the Ukraine war will turn out to be Xi Jinping.
Sir, although I told Mr. Bose last question, the last question is coming now. And that is your quick views on asset classes, equity, fixed income, gold, real estate.
Now that, I know that in that IPL match, they hit 5 sixes or something, right? So, now you caught me on a googly. This is absolutely This is absolutely not my area, the stock markets, capital markets. So,
In the context of this inflation and the interest rates going up and
see,
whereas economic growth is happening. So
I mean, I can only give you the example of the S&P 500, which unlike the Sensex or the Nifty is 500 stocks. Okay. So it's a very wide, it's not like the Adani stock, remember that its weight, the public float was very little. So S&P 500 in the America is supposed to be a fairly widely representative and diverse stock. So when the Silicon Valley Bank went down, the banking stocks in America took a big hit. Signature Bank was closed, and yet their Sensex S&P 500 went up. Why? Because just these two companies, Apple and Microsoft, now have 16% weight. So it's very unusual. You have this massive carnage going on. Interest rates are going up. Banks are shutting down. But their stock market is going up because these two guys are pulling the market value at one time, not now, a few years back, the market value of the top 5 stocks in S&P 500 was more than the bottom 292. So ऐसे situation में हम क्या बोलेंगे stock market का? The Sensex keeps going up, and half the Sensex people are their current price is below their 52-week average. तो भी ऊपर जा रहा है. The disproportionate influence of Reliance and Adani stocks. Not me. No, because I believe that I believe the bullion I think will remain strong because actually the price of gold is a reliable indicator of the risk aversion in the world. When there is risk aversion, people used to instinctively go to dollars and US bonds, but US ke baare mein confidence kam ho raha hai, to just add to what I'm saying. But the confidence in gold remains.
yeah,
So
actually,
gold has already crossed $2,000, I think.
Yeah. FY23, the last financial year, the best performing asset class was the sleeping giant called gold. That was the best performing asset class. And what Dr. Ranade has been saying that given the risk factors globally, this year could be a repetition, but let's see how things go. With these words, I would now like to. Yes, that's the biggest actually tailwind for gold as an asset class.
It's holding by some 200 tons or something.
India has been amongst the biggest buyers, and so have been many other countries also. Yes. So can I hand over now to our Vice President, Mr. Rajkumar Agarwal, to give a vote of thanks to Dr. Ranade.
Dr. Ranade, members of the chamber, guests and friends. After a well-rounded exposition of the world economy and with historical, perspective about it, it is my most pleasant duty to propose a hearty vote of thanks to Dr. Ranade, Vice Chancellor, Gokhale Institute of Politics and Economics. Thank you, sir, for kindly sparing some of your valuable time in addressing the members of the chamber today. India is not immune to global shocks, and they will undoubtedly affect the country's GDP. However, the country is also more resilient than many large economies. I am confident that with strong domestic consumption and investment, as well as export competitiveness, India will be able to endure global headwinds and enjoy sustained growth. In this regard, thank you once again, Dr. Ranade, for sharing your valuable observations on how the Indian economy is likely to navigate itself amid global economic headwinds. I would like to thank the members and guests of the chamber for making it convenient to attend this special session. With these words, I would request all of you to join me in carrying a hearty vote of thanks to Dr. Ajit Ranade, Vice Chancellor, Gokhale Institute of Politics and Economics, with appreciative acclamation.
May I request Dr. Ranade to accept a small token of appreciation for sparing his valuable time to address the members today.